Welcome to the Future of Finance interviews. Today, Dominic Hobson will interview Daniel Eidan, the Solution Architect at R3.
Today is Daniel Eidan, Solutions Architect, Global CBDC and Payments Lead at R3. Daniel, thanks for joining us.
Thanks for having me.
Central banks are showing a much greater sense of urgency about CBDCs these days. Why is that?
That's a good place to start. Well, there's a lot of reasons, I would say. I guess probably the first thing that I would draw your attention to is the fact that innovation in payments has been going on for a very long time. So there's really nothing new here. The two kind of key things that I would point out are the adoption of RTGS, real-time gross settlement systems globally. That's been kind of increasing steadily for the last 20 years. And then more recently, probably the emergence of faster payment schemes all over the world. I think the numbers are that there were about 15 faster payment schemes globally in 2014, and now we're looking at over 55, and that trend is going to likely continue. With that said, I would also say, cryptocurrencies more broadly becoming something that has become much more relevant. Different types of stable coins, and of course the introduction of Libra that caught the attention of central banks and regulators alike. The Central Bank of China releasing the DCEP focused primarily on some retail and wholesale use cases, both kind of inside China and in neighboring countries with some of the trade finance work that they're doing. And then of course there's the unfortunate circumstances around COVID-19, and I think that's had some kind of auxiliary impacts on the work that's being done with CBDC. Things like the decline in the use of cash seems to have been accelerated by the COVID crisis. Disbursement funds, otherwise known as helicopter money, and it kind of showing the access of the type of access that the government has directly to its citizens, and putting some stress on that kind of connectivity, and then things like trade finance routes changing and kind of money movement along with that. And then last but not least, kind of dollar liquidity is also something that I would think about as well. So central bank liquidity swap lines, and making sure that money can get to places in the world where it's needed most in times of crisis. So I think all these things together are contributing to a lot of the momentum around CBDC these days.
Now, you mentioned the central bank in China actually doing something. How far are we away from CBDCs? Are these still a purely or largely theoretical construct? Or are we at the stage of proofs of concept, or are we at the stage of actually going live with the CBDC?
Yeah, I think this is definitely not a science experiment anymore, which may negate some of the public perception around this. So this is very much out of the lab, and is looking at kind of production and pilots and go lives, and the Central Bank of China is a testament to that. I think one thing that's important to emphasize is that every country and every economic region has a very different set of circumstances, and there's nothing better than China to demonstrate the different circumstances. Those circumstances are primarily around digital identity, and kind of centralization versus decentralization and privacy of information and things like that. So China has a specific set of circumstances that have enabled it to potentially move faster than some other Western societies. But the case is well made that this is the genie is out of the bottle. This is definitely something that is going to happen at different speeds in different areas of the world. And now I would say that the majority of the friction is more around policy and governance than it is about anything technological.
You've indicated that this is going to happen at different times, at different speeds, in different jurisdictions. Do we think then that CBDCs are going to come in different shapes and sizes? And if so, what sort of categories would you put CBDCs into?
Yeah, CBDC would definitely come in. It is coming and is going to continue to come in different shapes and sizes. I think the most common misconception is that CBDC is one thing and there's one size that's going to fit them all. There's a lot of different design decisions that need to be tweaked for different economic and different countries around the world. And I think we see that today, if we think about kind of what's going on in China versus maybe what's going on in Sweden with Sweden's Riksbank, where they're focusing on retail use cases, versus maybe what's going on with the Banque de France or the Monetary Authority of Singapore, and the Bank of Canada that was generally more focused on wholesale use cases. So I'd say if I had to kind of categorize CBDC into different categories, I guess the first thing that I would do is I would offer a definition of central bank digital currency, which is a good place to kind of avoid any confusion. So I would say probably the most concise definition for central bank digital currency is first and foremost that CBDC would offer a third form of fiat-backed currency. So it would offer a third form of government-backed currency in addition to cash and reserves. So this isn't coming instead of an existing medium. It's coming in addition to the two mediums that exist today. It would obviously, by being issued by the central bank, would benefit from the full faith and credit of its issuer, the sovereign country that the central bank is associated with. And it would kind of play a role primarily in digital tokenized markets from what we can tell. So that would be kind of the go-to definition that I would use for central bank digital currency. And then if I would have to kind of think about the different categories that would fall into, I think that the most common one is retail versus wholesale. And that's just a fancy way of saying retail is accessible to everyone, whereas wholesale has this kind of walled garden and limited usage around it. If I focus first on the wholesale, and I think that would kind of chronologically make sense because most of the work that we've seen in CBDC started on the wholesale side. The majority of work there is done either for interbank settlements, so moving large values of money between different banks, potentially in the same geography, but also potentially across borders. So you can think about that also as like an FX transactions for dollar versus yen and or dollar versus euro and things like that. And in addition to that, also security settlement. So and again, that can be in the domestic context or in the cross-border context, where all of a sudden security settlement takes on a much higher risk profile. So the wholesale sector would kind of be the first side. And then again, kind of chronologically, there's been more focus lately on the retail side. And what retail would mean is kind of general CBDC. So you and I could also kind of hold that instrument. And some of the work that's being done in retail, well, the money has different attributes depending on the kind of the aspects of how much we're moving and at what rates and what the kind of risk profile is and who the users are. So wholesale and retail would kind of be the two broad categories. And then I think I would also kind of use a taxonomy of what the actual implementation details are. So is this something that's done on a distributed ledger of some kind, or is this something that's kind of underpinned by a centralized architecture? Are we running something that looks a little bit more like an account model where your balance is held by some type of custodian and guarded with some type of access, so that when you want to make a payment, you need to tell me who you are, and we need to make sure that you have the right balance to make the payment? Or are we using something that looks a little bit more like a token form, where that means that there's a type of digital bearer asset, and whoever holds that asset, and that asset isn't, whoever holds the asset effectively can kind of claim the rights claim the rights that it holds. So again, wholesale, retail, DLT, non-DLT, tokens, accounts, there's kind of a lot of different taxonomies that you can slice CBDC up into.
You've explained very clearly the principal difference, the retail versus wholesale in CBDCs, and you've cited a couple of examples of use cases on the wholesale side of interbank payments and security settlement. Are there other use cases, particularly on the retail side, which we can, if you look a few years ahead, that the world can look forward to enjoying the use of?
Yeah, absolutely. So again, I guess you mentioned on the wholesale side, there's payment versus payment and delivery versus payment. If we move on to the retail side, things get a little bit trickier, and I think that things get a little bit more diverse actually, because you can imagine the retail use cases for me living in Toronto, Canada, are going to be very different than someone maybe in an emerging economy. I think a lot of the conversation is focused now on retail CBDC as an instrument for inclusion. The reason being that there's a potential, if constructed as a bearer instrument similar to cash, anybody can hold it. Of course, that contradicts a little bit with KYC and AML requirements, but that thread is slowly being woven. Cross-border payments in the retail context are also a big driver. So you can think about kind of the world of remittances, and the World Economic Forum has as one of its key agenda items to lower the cost of remittances globally, that I think today stand at something like 7%. So CBDC has the potential as this kind of tokenized bearer instrument to not only introduce inclusion, but also to enable people to move to retail users like you and I to move money across borders in ways that are much cheaper, faster, and more efficient and have more visibility. And then I would say that the last thing on the retail side, and this is a kind of ongoing trend, and we see this with the ISO 20022 standard, is augmenting payments with richer data that's associated with it. Now, some of that kind of connects to delivery versus payment, because I would know what the payment is against when I'm sending the payment, and they don't ride two completely different rails. But on the retail side, I think that this takes on a slightly more nuanced form, where what we're seeing is not just the addition of data into kind of the payment instrument itself, but also the embedding the payment instrument into other applications. So what do I mean by this? As a retail user, I don't want to pay for my cup of coffee. I just want a cup of coffee. As a retail user, I don't want to pay for my Uber ride. I just want to get from point A to point B. So Uber is a good example, because you can embed the payment, kind of the traditional payment, within the application. And there's certain challenges associated with that, specifically around kind of the payment stack and kind of how complicated and nested it is today. And there's an idea that CBDC would kind of flatten a lot of that structure and enable you to embed retail payments inside applications that would make the customer experience much, much better and cheaper for the merchants as well.
You're describing a world in which it's very different from today. It's almost like fiscal and monetary policy have been fused. You've got governments putting money directly into people's bank accounts in the form of welfare payments, pension payments, and so on. You've talked about remittances being completely revolutionized, and you've begun to talk about CBDCs and their role in an increasingly data-driven economy, in which the details of the transaction get in some way fused with the payment itself, and all sorts of possibilities open up. You mentioned digital identity as well as being crucial to making all of those things happen, for the obvious reason you don't want to be sending money to people you don't know who they are. So just finally, perhaps I could ask you to perhaps expatiate some of the vision the details of which you've touched on here. What is it that makes CBDC such an important milestone, I suppose, or method of change in our entire economic, financial, and indeed social system?
Yeah, well, there's no crystal ball, so it's going to be hard for me to make accurate predictions, to say the least. But I think what kind of catches a lot of my attention around CBDC, in contrast to some of the innovation in payment work, I mean, on one sense, they're a direct continuation of each other, right? We've been innovating on payments for a long time, and this is just another step. The difference, though, is that a lot of these innovations in payments kind of traditionally have been stacked on top of each other. So every time we introduce another layer in the stack and another layer in the stack, a good example of that can be things like Venmo and Apple Pay that seem like an innovation, and they are from a customer perspective. But then when you kind of look behind the curtain, what you actually see is that Venmo and Apple Pay are a layer on top of the credit card rails, that are a layer on top of the commercial banking, that are a layer on top, and so on and so forth. So what's happening is, the innovations in payments are slowly building up this stack, and just as a consequence of that, the payment stack is getting more and more complicated and potentially less transparent and more expensive to some degree. And what CBDC is kind of offering is, I would almost think about it as a top-down change, where the central banks are actually looking at this, and instead of looking at what's going on around them and responding to a threat, they're actually turning this into an opportunity. And that opportunity is to change the instrument itself. And as a consequence of changing the instrument itself, all of a sudden there's potential for all these kind of things, all these downstream functions to change as well. Now, I would caution against being too loose with some of the things that we're describing here. When you say central banks will be able to put money in customers' hands directly, that doesn't necessarily mean that you and I will have an account at the central bank tomorrow, or that we could even get tokens issued to us from the central bank. I think generally speaking, everybody is proceeding with caution, and because this is such an impactful change, it needs to be a very measured approach, always counteracting kind of the need for innovation with reduction in risk as things get rolled out by central banks, which is a very, very tricky thing to do. So a lot of work is being done today to understand those nuances, to understand the impact of these things, and how can we, in a way, kind of leverage and use all of the existing global financial infrastructure that generally speaking works exceptionally well, and how can we leverage all of that momentum and then integrate a CBDC into that ecosystem in a way that kind of brings the benefits but reduces the risk. So there's a lot of design decisions that need to be made, and like we said earlier, there's no silver bullet. So we're deeply engaged with many central banks and regulators and commercial banks that are slowly kind of figuring out how to implement this. And what type of services and offerings that they can provide that also sit around CBDC. We mentioned digital identities. We should also mention digital assets. We should also mention trade finance. We should also mention, remittances. So everybody kind of downstream from the central bank needs to not only be able to interact with CBDC, but also ultimately kind of integrate CBDC into their wider offering as well, because this is very much the direction that we're going.
I'm glad to report we have events coming up on virtually everything on that list of topics you mentioned right at the end there. I'm going to try and temper my excitement about CBDCs, but I can see they are going to have a massive impact on the system over time. We just have to accept that central banks proceed a little more cautiously, perhaps, than entrepreneurs like to do. But Daniel, thank you very much for spending so much time with us. It's been a very interesting discussion, and I look forward to continuing to work with you on the whole area of CBDCs. Thanks very much for joining us.
Likewise. Thanks for having me.